What is going on, everybody? My name is Christian Robert, and on this channel we talk stocks, personal finance, and wealth building. And today I have 3 different ways you can invest in stocks for beginners. I want to try to start doing a lot more beginner type of videos. I share a lot of my personal financial stuff on here, my dividends that I receive in my accounts, all the stocks I'm buying and selling. But I want to open this up to more like beginner videos. I want to expose new investors to more ways to invest and whatnot. So this will be 3 different ways to invest in stocks for beginners. But as always, if you haven't already, make sure you subscribe to the channel and hit the like button. But I'm going to take you inside of my Robinhood account and talk to you a little bit. Now, there are so many different type of investors out there, and everybody has their own unique strategy on how they invest. And I think that's important. It's about, really figuring out what you want out of the stock market and to really have realistic goals and expectations. I know for myself, early on in my investing career, I did not have realistic expectations, and that cost me many, many dollars. And that was mainly due to I was very unknowledgeable and I was playing with too much money with not enough knowledge and understanding. So I want to teach you guys some different ways that you can invest. I might not do all these things, but I think it's important to understand what's out there for you, to have options, and just to expose yourself to new possibilities maybe. And the first thing I want to say is swing trading. Now, swing trading is a very popular way many, especially new investors, I feel, trade. And I'm just going to take you inside one of my stocks, and that would be Tesla. Now, if I'm a swing trader, I'm trying to get in and out of this stock in a very short amount of time, within days or weeks. And so let's look at a 3-month chart. This is a great example. See this dip here? Okay, so on January 3rd, it dipped to $300. It was previously at $330. So it basically took a $30 drop. I don't know percentages, but it took a $30 drop in about a week or so. Now, if I'm a swing trader, I might buy this stock right here and say, okay, it took a pretty big hit down. I think it's going to recover in the near future. And then what do you know? In 6 days, it's back up to 330. So that's when I would sell it for that $30-some profit. I'm not looking to hold this stock for a long time. I'm trying to get in and out. That's basically the name of the game. And it's pretty much the same as day trading. I think day trading is more like it says, you're trying to get in and out in that day. Like Ricky Gutierrez from Tech Buds. I know he's a really popular guy on YouTube that day trades. But I wouldn't say it's more risky, but you really need to know what you're doing for this, because who's to say if it drops to 300, it's not dropping to 270, and then you might panic and sell it. So that's definitely a good option for many investors. Now, the next way to invest is what I personally do, and that's buy and hold. And that basically means I see a stock, let's say Nvidia. Nvidia is currently one of my biggest holdings. I bought this stock because I think that they are going to continuously grow the company, and they are going to bring in more and more money on a yearly basis. And so I just want to buy the stock now, and in 3 to 5 to 10 years, however long it takes, when it grows in size, obviously when a company grows in size, the stock value should follow suit. And so when the stock goes up accordingly, then I might say, okay, you know what? I've made my money. It's time to sell and move on to the next investment. So let's look at a 5-year chart in this company. 771% increase in 5 years. Now, obviously, the NVIDIA is a special exception. Most stocks will not see this kind of growth in 5 years, but that just shows the possibilities with buy and hold stocks, especially if you're buying these huge growth stocks, which NVIDIA is. So if you got into this stock 5 years ago, you purchased it around $17, $18, which is crazy, and you just held it. You did nothing. You just bought it and sat tight, forgot about it for a couple of years, and boom, you've made 771% of your money, and that is a beautiful, beautiful thing. I do that, but I also primarily invest in dividend companies, but I buy and hold those, so I'm always receiving dividends along the way. This also has a dividend. And the next option is something that you probably haven't heard of. It's not talked about very much, but I think it's a very unique way that you should at least know about, and that is dividend capturing. If you want to follow a YouTuber that talks a lot about this and does this, I suggest you look up a YouTuber named Dr. Dividend, and he does a lot of these videos, and I think it's super interesting. But let's just pick another stock. I want to pick, okay, we'll go with this one. This one is Gladstone Corp Commercial. This is a monthly paying dividend stock, but you'll see my point. So down here, you see a history of the dividends I received. So every month I receive 50 cents for the shares I own. I own 4 shares. It pays me 12.5 cents per share every single month. Now, see here where it says date received, February 28th. That is the day I received the dividend. Now, for the following month, which it's currently March, it's actually March 3rd today. Let's say the ex-dividend date for this stock is March 10th. Now, what the ex-dividend date means is that if you own stock before March 10th, you are eligible to receive the dividends for that coming month. Now, most companies pay out their dividends quarterly, but this one is monthly, so bear with me. So if I have the 4 shares, which I do, and I hold it till March 10th, I'm going to receive this dividend again for March. Now, what dividend capturing does is that, say on March 9th, I purchased this stock, and then March 10th rolls around, which is the next day, I already qualified for that dividend, which would be at the end of the month. Now, on the 10th or 11th or whatever, I could sell that stock and I'd still receive the dividends for that month. So in a perfect world, let's scroll up. In a perfect world, this stock is at $20.43. So in a perfect world, let's say on the 9th, I buy this stock for $20 even, and I sell this stock after the ex-dividend date at $20 even. I made no profit off purchasing or buying and selling the stock, but I'm going to receive that dividend. So that is a really interesting way that maybe new investors want to explore. Now, this is all just for educational purposes only. I am not a financial advisor. You need to do your own research and all that stuff before you make any investing decisions. But I wanted to expose you guys to 3 ways to invest in stocks. There's a lot more different ways you can invest. There's option trading and all these other things, but these are 3 ways that I feel would most benefit new investors, beginning investors. And comment down below if you have any questions, if I didn't cover something correctly, or you want me to break something down more. Comment down below what investing strategies you're currently using and if it's working for you, or what you want to change with your investing strategy. But I hope you guys found some value out of this one, especially if you're a new investor. And if you're a new investor, don't ever be scared to just comment down below. I know that some people might think investing is intimidating, but this is a supportive community. I'm always answering your comments and trying to help out as much as I can. But as always, if you haven't already, subscribe to the channel, like the video, and I'll see you in the next one.